So if you look at these videos, these channel, it's pretty much divided whether we're going up or down this coming week. And the reason why is because we have a divergence in information. We got, like I said, there's three things to trading or being a successful trader, and that's fundamentals, technical analysis, and forward-looking analysis. And at this point, um, we're at a trend line that a lot of technical analysis are showing, um, and it's on the S&P 500. But if you look at the Nasdaq, of course, it broke that trend line. But the other indexes, let me see, the Dow Jones. I don't think I have it drawn, but it may be right at that trend line as well on the Dow Jones. And let me see if I can draw it real quick and see if it makes sense. Right, it should be right there. And I don't know. I guess you can draw it like that and say, hey, that's the trend line. And if it reacts negatively to it, then there's a reaction to it. However, you move it down to this point, then it's above. Technical analysis right now, I think, is going to be the last of the three components that I mentioned, and only because it seems like um, it's broken. Like the technical analysis right now, it seems like it's broken, and traders are going to try to either squeeze you or squeeze the shorts, or it's just gonna try to sell off based on fear. So tomorrow, I mean, in these videos, they're gonna try to guess one way or the other, whether it be, positive or negative. This one says it's positive, but there's other ones, most of them saying like, well, a lot of them are saying that the crash is the next move because of this trend line, and if they are correct, they get to follow up with a video validating, hey, look, I'm so good, I drew this line and it correct. This guy will, of course, forget about it. He doesn't even need to mention it because, well, he's predicted up. So if it goes up, then he will report on his next video, hey, look at me, I'm so smart, went up. And that's just how it goes for all these channels because they all deal with essentially technical analysis, and they base all their subscriptions, their analysis, I mean, their money or their potential to make money off of YouTube, off of technical analysis. And at this point right now, I can say technical analysis looks to be the least important components over fundamentals. And we can talk a little bit about the fundamentals, right? Because I think Moody, let me look at the subscriptions. Moody downgraded the there's some layoffs this week, and there's some downgrades on the S&P 500. Um, and I may not be able to find it, but I think the fundamentals is on the negative side, and that may or may not be friendly to the stock market, depending on how the traders analyze the fundamentals in the short term. In the long term, obviously, the long term is going to be negative for the stock market on a on the fundamental, if jobs, layoffs, weak consumer sentiments, and that's what I mentioned on my last video, right? That last week you have weak consumer sentiments, and that was the reason why they don't have a one for next week or last week, so I have to pull it up. But it was on Friday. Oh, it was on Friday, right? So let's just apply. So it's this guy right here. Well, it wasn't that Friday. It's this Friday right there. Apply. Is this guy, the consumer expectation, the consumer sentiments were way below expectation. So that's going to put a dampener on the holidays coming up. So already this is going to say that we're going to have a pretty weak Black Friday, pretty weak Christmas spending, Christmas, you know, data. So all the economic data is going to come going forward in regards to spending. It's going to, it's going to pretty much validate what this is. I mean, you have to base this data saying that it's correct because here's the forecast and here's the actual. So people are going to react off of the actual. And the way fundamental works is it's and why trend works is it's very self-fulfilling, right? Like often trend will continue to go up or continue to go down based on just self-fulfilling. Like if you feel negative, if you feel bad, it's just gonna continue to go down, and that's what this is. It's gonna continue to go down. So that's the consumer expectation, right? The trend is down. So now the economic data is going to reflect that. And you can say, well, it's down here too. Yes, you're correct, and it went up, but this is the end of the year. This is the seasonality of things. So maybe it reverse. I mean, I can't really, it's hard to do a forward-looking analysis and just say, well, it's just going to reverse because people are going to spend on the holidays, and Black Fridays. I mean, I guess anything is possible. But you have to maintain that posture in the meantime for the fundamental. So any data that comes out right now, let's look at this week, right? Forward-looking analysis. Okay. The other thing I noticed, well, first we're gonna say the 1 year expectation and what is that gonna say? Well, it's going up. So most likely, right, it's going to be higher on Monday. So when this number comes out tomorrow at 11 a.m., already the future is down. And it's down because if you look at this, right, there's a reaction off of this moving average. So right now it's, the ES is at 40, it's close to 4,400. It's probably going to get to 4,400 tomorrow. And then on the reaction to the 1 year consumer inflation, and that should be higher than 3.7, so that's going to be negative. For the morning session, right, the afternoon session, like I said, there's a theme there's a V recovery theme in this current time frame. Big V, little V, little V. This is a significant V as well, intraday. So there is a significant V trend, V recovery signature that may and probably will apply to the afternoon tomorrow because guess what? The CPI forecast came in over the weekend. I mean, I looked at this on Friday, and the year-over-year CPI had not been released, or was not published on this site at least. And now it comes in at 3.3%, which is a lot lower than the previous, which is 3.7, right? The CPI month to month is 0.1, which is a lot lower than 0.4. And I speculate that lower CPI, and look at the trend, right? The trend being it was going down, it went up, and now if it's going down again, well, guess what? If that data comes in where it is expected, or even lower than expectation, right? That is going to trigger a massive short squeeze, meaning it's gonna go higher. The PPI the forecast hasn't been released yet, but come Monday, that's gonna be released. So I need to look at the PPI, but I don't even know if the PPI is that important. Um, you know, it is important, but because the CPI comes out before, the investors are gonna react off of this information, which is already published. Um, I'm assuming it's already published, even though this came out late. Um, I think this was already published to the public or to the traders and whatnot. And this is really what triggered the short squeeze that I didn't really anticipate, because I was basing it off of the consumer sentiment. Um, I was basing it off of the consumer sentiment and also the inflation information. Well, that's Saturday, right? I was basing off of this, and I was saying how, yes, the inflation number is negative, and that's going to be a downturn. And guess what? It did trigger the downturn initially, or the sell off, the selling initially. And then I speculated that because these were much lower than the forecast or expectation, that sparked the rally. And that's probably still the case. But it's also because of, that information that I just published, that I talked about on the CPI, that expectation, right? The expectation that came out this week, let me see here, this week, the CPI, this is much lower, and I think this is the big reason why we had a short squeeze tomorrow, on Friday. And so this is gonna come in. This is gonna cause, Tuesday going to be a breakout. Uh, I just don't see it any other way. So even though I'm by nature short, what can I say? It's gonna be, if it's gonna be an end of day low, probably not. But anything is possible. Whatever it does tomorrow doesn't apply, or on Monday. Whatever happens on Monday doesn't apply to Tuesday, because Tuesday, this data is going to dictate how the day is going to happen, whether it be significantly lower or at expectation or higher. That is gonna be the reason why it does what it does on Tuesday. So Monday is, at least the morning part of it, toward the beginning of the afternoon, will be a lower trading day, probably even test 4,400, right, on the S&P 500. Either that or 4,400 on the ES, which is the future. So this is 417. This is 415. So it may even already open tomorrow at 4,400 on the S&P 500, right? And that's gonna be an even number, probably right here, 4,400. So like I said, it typically react off of even number. So technical Monday is gonna come. It's gonna gap open probably close to 4,400. May have an initial downturn, and then the longs are gonna rally it, um, and then most likely by 10 10 o'clock. Where's that? Yeah, by 11 o'clock, that is gonna be the downturn, and they may have a downturn prior to in anticipation to this number. So it'll be some kind of a V and then a downturn. The afternoon session, who knows what's gonna happen, right? Depending on how much it sell off, it may touch the 5 minute, and I don't think, well, who knows what it potentially, right? It may even touch the 15 minute. But whatever it does, the afternoon I'm expecting a V. So whether it touches the 15 minute or undershoot the 5 a little bit, then go higher, I'm expecting a V and then a breakout on Tuesday. So Tuesday, I'm expecting this information will open up and it's just gonna shoot higher. At least initially. Who knows if it's gonna be end of day high or not? I mean, I don't see why it can't do end of day high, right? I don't see why it can just won't flush out all the longs. I mean, it can go all the way back up here even further, even though we may be fundamentally in a bear market. And this whole upturn may be due to the expectation of the holidays, the seasonality, right? Black Friday and Christmas. Even if the sales are weak, we won't get that information until later on. And even if the information is weak, the investor might treat that as a good thing. Like that's going to be lower inflation. That's how difficult it is to use fundamental when it comes to analyzing the stock market. Um, because fundamental really doesn't matter until it really matters, right? Until the layoffs start coming, big tech starts really announcing big layoffs after big layoffs. GDP number comes in really big, and the government is stalling or doing all these extra things, or so there's some war or financial disasters or another SVB. Then those fundamentals really kicked in, and then all that matters is that fundamental, and it's just gonna drive it like big, big. When was the SVB fiasco? I don't know, but it's just I think this was it right here, right? No, I don't know when. I don't know when the Silicon Valley Bank happened. I can't recall. I thought it was in. It couldn't be doing this event. I thought maybe it'd be here, right? Somewhere here, maybe. Who knows? Can't remember. I think it may even be here, right? So that was all the way. Well, was it last year already that happened on SVB? I thought it was this year. So it could be. Who knows? I can't remember. But at that point, that's when you get these big red candles, right? I think this might be SVB. Who knows? Then you get these big red candles. That's when the fundamentals really matters. But at this point, right now, I think technicals is broken, fundamental irrelevant, and the only thing that matters is forward looking, right? These data that comes out, and the traders are going to react aggressively to it. So I'm expecting aggressive moves, not on Monday, but comes Tuesday and Wednesday. These are going to be very aggressive moves. Very aggressive moves, either to the upside or the downside. And of course, I am predicting to the upside because I'm predicting these numbers going to come in favorably, um, even below forecast or below expectation. So we're talking about potentially a huge upswing, even though by nature I'm bearish. That's just the way I am seeing it. Right? I'm seeing this as breaking out of the monthly trend. Now let's take a look at the composite. It should be above it, right? Yeah, the composite is above the 5-month trend. The QQQ should be way above the 5-month trend. So if you're bullish, trading the triple Qs, leverage on the upside, probably gonna be your best bet. Uh, I don't really like trading the triple Qs, but where is that at? Right here, triple Qs, right? Pro shares, Ultra Pro. I think these are positive. Yeah, these are leverage to the positive side. So if it goes all the way to 47, that's a big gain. It's, if you buy 1,000 shares, whatever, you play options. Play options on the QQQ. Um, I mean, yeah. The thing about it is, people see this and they go, "It's so expensive," and they don't chase. Well, that's just the way it is. You just gotta chase, and it's just gonna go higher and higher, right? Because this data now. Obviously, I can be wrong, and this data comes in completely higher than expectation and comes in like 3.5, 3.6, and that's going to trigger a sell off. But even then, I think the longs are so strong right now that any type of sell off is going to V. I mean, it's just the V theme is still in play until it's not in play, right? And you would think that on Thursday where you have this, you say, oh, that broke the V. It's gonna continue going down, and it would have if the information came in the way it should have, right? If this inflation number had been released, the forecast number had been released like at 3.7, 3.8, that was going to be, here is that downturn on the consumer sentiment and the inflation data that came out on Friday, which is this guy, right? That reaction, I would think was what's going on here. And then the forecast on the CPI, it's going to probably do something like that and then just sell off. And it will hit the 60-minute trend line, play around with it, and then end low of day on 365 or something like that, right? This will be moved differently. It'll be a lot lower, right? This will probably meet up, and it'll land like right here on Friday. Head the CPI forecasts come in closer to what previous month was, right, which is 3.7. So yeah, technical Monday, and then breakout on Tuesday. Continue breakout on Wednesday with an afternoon reversal because I do think uh, reversal Wednesday, reversal Wednesday is still very strong. So you have Tuesday and then Wednesday afternoon up, and then reversal Wednesday for the afternoon. Uh, you know, and then what happened on Thursday? These information continuing jobless claims. Now, this is where it's tricky too. I need to look at where the forecasts come in for these continuing jobless claims. So these forecasts are going to come in. I don't know. I need to pay attention, but they're going to be important. And I think there's going to be less jobless claims because of the Black Fridays, the seasonality. I think it's going to start kicking in this week where you have less jobless claims because of the seasonality of it. And that's going to be a negative on the stock market. So that may be when you have a first, and the housing starts are going to be weak. So all of these are going to be very weak. So that may be a follow-up addition. So Thursday may be the first correction, and then follow up on Friday as another correction. So that's how I'm seeing it right now.